So today I wanted to talk about mortgages a little bit with you and how to go about shopping for a mortgage and some of the key aspects of getting a mortgage. But instead of me talking, I've invited my friend and long-standing preferred mortgage professional, John Marroni, with me, and he'll be going over that with you.
So in the beginning, what we got to do is break the ICE. ICE is an acronym: income, credit, equity. If I know those three things, I know exactly what I can do for you. So in terms of income, there's all different types of sources of income. Traditional job, you have a 40-hour week and you're a W-2 employee is one. But there's other ways that we can use for income, as long as you can show that it will continue for at least 3 years. That would be rental income, alimony, child support, lottery winnings. I even had someone that had a scratch ticket. They were receiving monthly income for 20 years. We were able to use that as well. In fact, if you start adding all those up, you don't even need a job to have a mortgage, as long as you have continual income. C, credit. We just want to make sure your credit's mortgage ready for a good credit. Credit score is very important, which impacts your interest rate. E, equity. Where's the money coming from for the down payment? How much are you putting for a down payment? Is it going to be a gift? Is it going to be a grant? So all those things, we need to know exactly we need that information to know exactly what we can do for you. And then most importantly, what are you comfortable spending per month for the mortgage? And then once I know all that, I can tell you exactly what you can qualify for. What are the factors that affect credit score? I get that question all the time. Well, first of all, I'll say, all the time I see people say, hey, I see this low interest rate on the internet. And those interest rates do exist, but for someone that's putting down 40% and they have absolutely perfect credit. So the factors that go into it is your income, versus like how much debt you have, your credit score, and how much you're putting for a down payment. All those three things are the most important things that make up the interest rate. My recommendation is to, get pre-approved first to see what your interest rate is, and most importantly, to see what type of loan program you'd actually qualify for. So I don't want to buy because interest rates are too high. I hear that all the time. Well, first thing I'd say is, why do you want to buy to begin with? Like, what do you like about this house? I love the house. It checks all the boxes, but the interest rates are too high. Really what people are saying, they're not saying the interest rates are too high. They're saying, I'm concerned about my cash flow. So I'll take a look at their cash flow, and I'll say, well, you have an auto loan balance of $25,000 and you're paying $700 a month. You have credit cards for maybe another $25,000 and that's costing you $700 a month. So that's $1,400. My advice would be, if someone's going to sell their house and buy something else, maybe they're going to put $200,000 down. My advice is put $150,000 down, and that other $50,000, pay off your debt. You just freed up $1,400. In a cash flow standpoint, you'll find that even though you're going to a house with a higher interest rate, your total payments would actually drop. That's what I would recommend. So someone who's buying a house that's renting, same analysis. What do you have for debt? You were planning on putting down maybe $50,000. Well, let's talk about maybe putting down $25,000 to pay off, those credit card debts. And again, it's all about the cash flow. I'd say analyze your cash flow, and then you buy the house. You love the house. Maybe the rates drop, then you can refinance when the rates finally drop. Most importantly, you're buying a house to create memories and have a wonderful, wonderful life in that house. Yeah, so what they shouldn't be doing, I get that all the time. And the list goes on. It says, don't charge up your credit cards. Don't change jobs. Don't co-sign for anyone else. What I will say is, I understand you have to live your life. You can do those things, but my advice is check in with me first, and then I can run the scenarios to see how that will impact your pre-approval. We understand you have to live your life. We understand all of a sudden you need a new car. The advice is check in with me first, in a nutshell, to make your offer that much stronger. So in other words, what a pre-approval really is someone enters all their information. I run it through the system, they provide all their documentation. In fact, we even have our underwriters will underwrite the whole file without a property. You will have a full commitment. What that does is makes you able to compete with cash buyers. So when the commitment comes out, the only condition left is for you to find a property. I would say when you're interviewing the loan officer, you want to ensure that they're asking you the right questions in terms of reviewing your current mortgage goals and options. You know, because if they're not doing that from the beginning, then you just know you're going to be off the wrong path moving forward. You want to make sure that, you know, it seems to be the right fit for you, that they're answering all your questions, that they're accessible, whether it's, you know, whether it's a phone, email, text, that they're answering your questions. And then also, you know, ensure that, you know, they're aligned with good realtors as well, that will, you know, take your interest first when purchasing a home. A good loan officer, when making an offer, will also follow up with the list agent to ensure that they receive the offer and let them know that you're a strong buyer and that the offer should be considered. All those little things help, you know, get your offer accepted. That's what I give a first-time home buyer. Well, the very first thing in terms of, you know, working with a loan officer, get pre-approved. Pre-approved means, you know, running your credit, running it through the system to see if you get approved. Regarding credit, there may be things on the credit report that are not accurate. So if that's the case, you want to clean that up first. You want to know if there's any hurdles that you have to jump through before you even make an offer in a house. That would be like the very first step. Make sure you get pre-approved, gather all your supporting documentation, income and assets. If money's coming from a gift, a relative, then we're going to document all that. I would, again, going back to breaking the ice, we want to make sure we can document the income, make sure the credit is buttoned up, equity, where the money's coming from. We want to be able to source all that. And then once we have all that, you're ready to go shop for a mortgage, you know, based on your criteria, based on what you budget your money for on a monthly basis, based on the area that you're looking. And it all starts with getting pre-approved.